All right. Welcome back, everybody, to the Tim and Tim Show every Tuesday at 10 a.m. Eastern Time. My co-host, Tim Best, is not with me today. He is on site doing some property inspections and fun things. So this week, you guys get to enjoy a solo show by me. And I actually like doing these things. I don't do them too often, but I love the opportunity to. It allows me to kind of talk about some of my own personal experiences and enables me to be vulnerable about my thought process and my decision making process, and also back up some of the stories and experiences that I've had with real life stories to kind of show you um, how to take action with some of the information that Tim and I talk about on a weekly basis. So this week's show topic is about the three myths that keep people from investing in real estate and why I know that they're wrong. The first myth being that you need millions and millions of dollars to get into the commercial real estate world. And that's simply not true. I had the same limiting belief, and I'll label them as limiting beliefs because that's ultimately what they are. You don't need to have millions of dollars in order to get into the commercial real estate world. Hell, to be completely honest with you, you really don't have to have any money at all. I don't advise that. It makes your life infinitely more difficult. Having money in the commercial real estate world will definitely make it easier for you to to bring more value to the table. Ultimately, there's a lot of different pieces of a commercial real estate deal where you might be the person that's putting up the earnest money, or you might be paying for some of the due diligence costs. You might be paying for deposits with the lenders for the appraisal and surveys and all that kind of good stuff. It I'm not going to lie to you, it takes money to make money, right? At the end of the day. But I can honestly tell you that one of the first deals that I was kind of the lead sponsor, if the manager of the entity. It was a deal that I had done, or that we did do, and we still own it today. And I found the deal. Somebody else found the deal. Actually, I helped underwrite the deal. I helped negotiate the deal, and I had a friend who was literally sitting right next to me, and I was like, "Man, this is a great deal, but I don't have any money for earnest money." And at the time, it was like $8, $9, $10,000. Hey, Joe. Good morning. Good to see you. At the time, it was like 10 grand. I was like, I don't even have 10 grand right now that I can spare to write the earnest money check for this. My buddy was like, Chris, if you're watching this, my buddy Chris was like, it's 10 grand. I'll write you the check. I was like, okay, I'll give you a little piece of equity in the deal. If you write the earnest money, this is a good deal. We'll do due diligence on it together. We'll make this offer, and we'll, work towards putting it under contract so that we can go buy it. Sorry, I just muted my phone. It keeps dinging my ear. um, so that's how we got into the first deal, right? And it was like, okay, well, that kind of opened up my eyes to, I didn't find the deal. I didn't write the earnest money check. And I didn't sign the debt because I didn't have $1 million net. It was $1.5 million net worth at the time. And I had brought in different partners to the deal, and I gave away pieces of the deal in order to put together the team, right? And commercial real estate in general is a team sport. It's not something generally that you can go out and do yourself, especially when you're first starting. As you get more experienced, as your net worth goes up, as your liquidity goes up, you will start to become more and more valuable as a commercial real estate investor. I started with a very, very, very small slice of the GP where, I had like maybe a couple percentage points of the GP. I mean, it was laughable the amount of equity that I had. But what I gained from those very small pieces of equity was experience. And that somebody can never take away from you. With that deal, I didn't write the earnest money check. I didn't find the deal technically. I did help negotiate it and underwrite the deal. I brought in somebody else to write the earnest money check. I brought in somebody else to sign on the debt, two other people actually, to sign on the debt. And then I helped participate in the due diligence. I, basically run the asset management, and I helped raise the money. I raised like maybe half of the money, or maybe a little bit more than half of the money. So in that deal, I had literally $0 out of pocket, except for my travel costs to go do due diligence on the property. Right. So if you think that you need to have astronomical amounts of money in order to get into commercial real estate, it's simply not true. What are you willing to give up to get into your first deal? That's only a question that you can answer. But by assembling a team of people that have different pieces of the deal that you need in order to put the deal together, that's how you get the deal done. You have to be willing to provide value to other people, right? At the end of the day. And by giving pieces of equity in a deal, that is providing value, right? You are giving value in exchange of equity for something that they bring to the table that you need. That could be, other people that help you raise money, you sign on the debt, do due diligence, do asset management, find the deal, underwrite the deal, negotiate the deal, write the earnest money check. I mean, there's so many different pieces of a commercial real estate deal. You don't need to do it all for your first deal, right? And I preface that with, this is specifically pertaining to your first deal or even your first couple of deals. I think the one that I'm using as an example was my fifth deal. So like the first four deals, I was very much a supplemental partner. I brought a little bit to the table. I helped with the capital raising. I helped with the asset management, the underwriting. I participated where I could. And then as I got more experience, as I had more deals under the table, once I quit my W-2 job, which, I forgot to talk about, was 2 days ago. It was my anniversary, my four-year anniversary from quitting my W-2 job was 2 days ago. So that was exciting. But I mean, so you don't need millions of dollars to get into real estate. You just have to have a network of people to put together to do a deal, right? I mean, that's how we do most of our deals. Frank, to be completely honest with you, I don't do any deal myself anymore, right? I mean, Tim Best and I, we, if a good deal comes across Tim Best and I plate, we 50-50 it, right? And no matter what, ultimately, it makes it less stressful, so that, some of the risk and responsibility is shared between two people instead of one. And it really helps with growth, right? So like, obviously we own the management company together. We own the construction pieces, the construction crews are part of our company. We have the equity company, we have, all of the pieces to do the deal. So, we 50-50 most things now that we can by ourselves, because we can sign the debt, we can write the check, we can do the due diligence, we do the asset management, we do the operations. I mean, we do it all, but I didn't start there, right? So like, if you're just starting to join these shows and you don't really know who we are, we own and operate multifamily deals across the Carolinas. We also have a portfolio of properties in the Gulfport, Mobile, Alabama region. But we mostly focus on North and South Carolina. I did my first deal in August of 2021. So about 4 years into being a full-time real estate investor at this point. And yeah, I mean, it's grown astronomically from where I started, but I don't want to ever gloss over the fact that getting started was not easy. It took me, just for reference, 3 years of building my network, building relationships, understanding, learning how to underwrite deals, networking with brokers, networking with investors, networking with other people that do what I do. It took me 3 years to get into my first deal, right? So it's not a get rich quick scheme. It does take time, like anything, right? But I think what most people do is they quit before they build a network of people and they understand how to do a deal creatively. And at the end of the day, a lot of these myths that keep people from getting into the commercial real estate world, or any real estate world. I mean, it doesn't have to be commercial real estate. It could be single family fix and flips, self-storage, industrial flex, whatever real estate venture you want to go down. You don't need to have every single piece of the deal to be able to do a deal. You just have to have a network of people that you can rely on to help you get the deal done. Because if you provide value to other people, and one thing that was a limiting belief for myself was that I didn't know anybody worth $1 million that could sign on a loan. And I also didn't know anybody that had $100,000 sitting in a bank account that they didn't know what to do with, right? That was my own limiting beliefs. It almost stopped me from getting into the commercial real estate world. But I'm here to tell you that those are your own limiting beliefs, and you absolutely can get into any facet of the real estate world if you build a network and try to try to provide values to other, right? One of the books that I love to recommend people to do is read Go Giver. And if you can follow the principles of a Go Giver, what you put out there will come back to you tenfold. Absolutely. Okay, so that's my myth. That's a myth, that a limiting belief that people talk about all the time, is that you need millions of dollars to get into real estate. That's not true. There are so many people out there that want to invest in real estate, and if you can be the person that provides the opportunity for that person to invest in real estate, then you provide a ton of value to a lot of individuals. Um, Joe Bisping, I know you're watching this. You have a vast network of people, and I think you've quickly learned that the more you provide value to other people and you bring the opportunity to the table, a lot of people need somebody to bring opportunity to, right? Anyone has access to invest in stocks, but not everybody has the knowledge to know what stocks to buy, when, and why. And that's the role that a financial advisor or a wealth advisor would fill, and they charge you a fee to do that service, right? In the real estate world, there's a lot of people that want to invest in real estate, whether it's for cash flow or depreciation or any of the benefits of investing in real estate. They just don't know what a good deal looks like. So you can be the person that brings the opportunity to those investors and solve their problem of not knowing what to do with their money. Sometimes, you might be listening to this and think, oh, Tim, you don't know what you're talking about. But it is absolutely true that there are so many people out there with tons of money sitting in accounts, whether they're checking accounts or high yield savings accounts or investment accounts that are doing like 2-3% per year. There's so much opportunity out there to raise money for, offer them, either equity in the deal, or you can offer them interest rates to borrow their money as debt. I mean, you can talk for days about structuring deals. I mean, Joe, you can, I know Joe can attest to every single time he brings a deal to our Making Moves coaching group, we rip it apart a million different ways and think of different ways to structure it. And every time it's like, well, what is the problem and what are we trying to solve and how do we solve that problem? And there's no right answer to any structure. It's just what is present at that given moment that somebody has a problem that they need to solve for. I think that that's one of the hidden talents of a real estate investor, is that we are problem solvers, and we're able to kind of think outside of the box and figure out, how do we provide a solution to somebody else's problem. All right, myth number 2. We actually did a show about this like a couple of weeks ago, that now's the wrong time to get invested in real estate. I think that is so wrong. Real estate is forgiving over a long period of time. Where people get into hot water is when you run out of time. You have expiring loans, or that's ultimately it, right? Like, lending is the biggest problem, right? It's the biggest ticking time bomb, and it depends on what kind of debt you go after to structure your deals with. So, if you have enough time in real estate, is generally forgiving enough to either save you or make you money in the long run. Real estate is and always was a 10-year venture, 10-year horizon. And if you try to invest in a 12-month or 2-year horizon or less, like, flipping properties, essentially, that's when you can find yourself in hot water. Flippers, single family fix and flippers, they generally borrow money for 3 to 6 months, and they have to renovate a property, list it and sell it and close it within 6 months, or have their loan go into default, right? That's where the stress comes from, is when you're on these super tight timelines. If you have a 5 or 10-year horizon, you're generally going to be okay as long as you can pay your debt service and your bills. But now's the right time to get invested in real estate, right? Now's the right time because property values are down like 10, 20, 30%, depending on your market. Everything has been really kind of price adjusted for increased taxes, increased insurance, increased interest rates. Though we are starting to see some softening in the insurance market and some softening in the interest rates. The Fed just cut another 25 basis points. They're expected to cut another 25 basis points for the next 2 meetings, so another 50 basis points by the end of the year. These are all the signals of the real estate market is about to start turning around again. You start seeing more competition come to the market. You start to see the treasury bills start to drop, which lead to lower interest rates. property taxes, you can't really do much about that, but the cap rates have decompressed because demand has kind of slowed. So there's, all of these prices are down 20-30% right now in the commercial space. And now's the best time to go out and buy as much commercial real estate as you can, because we're kind of preparing ourselves for the next run up of this market cycle. Since 2022, it's been on a downward trend. So we're kind of into 2 or 3 years into a downward trend. I think we finally stabilized at the bottom at this point for sure. And the foresight for 2026 and into 2027 is that demand will start to come back up. There's more limited supply. So as people continue to move to hot markets in the Carolinas, with the limited supply, there will be more demand. Supply demand not in equilibrium. That's what causes prices to go up and down. And macroeconomics, at the end of the day, if you paid attention to that in college and maybe even in your high school classes, if you learned about it then. But now's the best time to invest in real estate. We know that the market has gone through its downward cycle. Prices have adjusted, and I'm ready. I'm so ready for the next run up. We're refinancing a lot of deals into 5-year loans right now, and that secures our longevity to kind of ride this wave up and kind of take and see what it's going to look like in like 2029 and 2030. So as we get into 2030, we'll start to see, hey, are we going to be able to sell these things for profit? We've ridden them, down and hopefully back up again. And with 5 years, hopefully that's enough time to kind of see through the end of this market cycle for properties that we bought like 2-3 years ago. So now's the best time, honestly. I don't know what else to tell you about that. I know it sounds like a broken record. We've talked about it extensively. We believe, with all the news articles and the information that's available to us, and kind of the forward-looking projections that values will start to climb in 2027, 2028, and beyond from there. If you look at any stock market chart, stocks go up, they come down, and then they go back up again, and then they come down, and they go back up again. I mean, that's just how investing works, right? There's up cycles and down cycles, and I'm ready for the next cycle up. That's for sure. I gotta have my coffee. All right. Myth number 3 I'd like to talk about is it's too risky to invest in real estate, and I think that is also false. Let me preface that with underwriting deals is purely speculative at its core, right? We are making assumptions of what the income and expenses are going to do over a 5 to 10 year period based on information that we know from the past, right? One of the things that severely hurt the commercial real estate world was over the last 2 years, insurance rates had gone up like 100, 200, 300%. Nobody was going to underwrite to 300% increases in your insurance costs. Okay. So that is something that you cannot predict. You cannot underwrite to. It would be unreasonable to assume that every single year over the next 10 years, your insurance is going to go up 100%, right? Now, there are generally accepted rules of thumb that you would apply to get you pretty close to what we think is going to happen over the next 5 to 10 years. But at its core, underwriting deals is purely speculative. What is the income going to do? What are the expenses going to do? What are the debt rates going to do? Did I hit my mute button? Can you hear me? I can hear me. It says my microphone's working. Yeah. Can you guys hear me? Good. Says my microphone's getting picked up. Can you hear me? Well, I hope you can hear me. Patrick, try turning your... Oh, okay. Thanks, Dennis. Yeah. Geez, where was I? Yeah, Patrick, Patrick Rourke, I think your sound might just be off of your computer. Yeah, so underwriting is purely speculative, right? I mean, we can look at historical charts and trends, and we believe what will happen over the long term. However, we cannot know that for certain, right? At the end of the day, we have to take calculated risk, right? Um, I would say it's too risky to invest in real estate if you have no idea what you're doing, right? But if you're educated and you surround yourself with other people that are doing what you want to be doing, you have a network of people that you can discuss and rely on and ask questions to have an understanding of, is the investment you're trying to make risky or not? And I would say what would make an investment more risky than another one is not understanding your numbers and not understanding the potential market trends of that market. Something that we talk about all the time is you have to know your market. You have to be an industry expert in your specific market. If you're a newer investor, pick one market to become an expert in. One of the problems or mistakes that I had made over the beginning couple of years when I was trying to get into my first deal, I was looking at deals all over. I mean, I was, in Virginia, North and South Carolina, Georgia, Florida, um, Alabama, Tennessee. I mean, I was looking anywhere somebody would send me a deal, I would look at it and I would try to underwrite the deal and figure out if it's a good deal or not. That would have been a risky investment because I didn't understand exactly what was going on with that market. I didn't understand the insurance risks. I didn't understand the property tax risks. I didn't understand the rental market economics, whether they were increasing or declining. I was making assumptions on what I thought rents were in the area. And now, obviously, using tools like Rentometer and calling property management companies and all that kind of stuff is all really necessary information. However, nothing is going to replace pure experience in the market. Um, Now you might be saying, well, Tim, that's counterintuitive. How can you pick a market and become an expert in it if you've never done a deal? You have to partner with people in order to get experience, right? Go back to the beginning of the show. I talked about how I put together a deal and I brought different experts in, and I had a very small piece of the deal, but I still got the deal done because I was able to bring in a bunch of different people, right? Some of those people had a lot more experience than I did. Some people had a lot more net worth than I did. People had a lot more liquidity than I did. All of those things matter. And that's how I got a lot of experience in the market, was because I did deals with other people until I felt confident enough to do them myself, or with Tim Best, honestly. Obviously we're partners and we do the deals together now. So we vet out the deals. We vet the insurance numbers, we vet the rental rates, taxes. I mean, everything, utilities, payroll. We vet everything out, right? A lot of that comes down to experience, but at the end of the day, everything that we're doing is calculated risk. Does every deal go perfectly? Absolutely not. I mean, there are so many deals that it's trying to herd cats to keep it on the rails. And there are other deals that I'll be honest with you, I don't even know the address to the place because I never have to hear about it. Those are the types of deals that everybody wants to invest into, but it's not always a reality of what every investment is going to be. Obviously, there's a risk reward. Uh, some deals that are more risky will provide you a higher level of return. Deals that are less risky, a little less return, and trying to figure out for your own portfolio where's a happy medium or a happy balance between all of that is not an easy task. It's very difficult. Easier said than done. I'll be the first to tell you. I'm not the first to tell you, but I'll be the first to reiterate that it's much easier said than done because you don't really fully understand each individual deal until you own it for at least 90 days. There's so much that can happen over the first 90 days on assumptions that you thought were right or information that you thought was right that was actually wrong. Things change ultimately. And at the end of the day, when you're investing in real estate, it's calculated risk. I'll tell you why I got into commercial real estate instead of single family. I don't like how single family appraisals are done on comps instead of income because, in my opinion, comps are subjective to the appraiser's opinion of finishes. And that may or not be true. And frankly, I don't care if it is, but that's how I feel about it. And that's why I never really got into the single family space. I did one single family deal, but that was it. And I never did another one. What I like about commercial real estate is the ability to project what the income and expenses are going to be over a period of time and try to get pretty close to what your future value of a deal is going to be. I feel like it is the best way to make a calculated risk with limited downside exposure by being able to accurately predict what you think the value is going to be. Now, as I was saying, if the insurance rates go up another 100% over the next 5 years, I'm not underwriting that in, right? I am underwriting like a 5 to 10% increase for the next 2 or 3 years. However, even that's false now because we've started, we just on our renewal, our master policy renewal, we got a 30% right? So, underwriting is, again, it's purely speculative, but you try to underwrite to assumptions that you believe are going to be correct to limit your downside risk. And you have to take risk to make money. Investing in stocks is risky. Investing in real estate is risky. Investing in Bitcoin is risky, right? Investing in literally anything is risky. But the more you know, the more subject matter expert you are in each one of those topics, that's how you make it less risky because you're more comfortable, you're more aware of the market, the impacts of the market, what can control the market, what could negatively or positively impact your investment, right? My brother, for example, is big into Bitcoin, ETH, and a bunch of other crypto stuff. I'm not. I have some. I just put some money in there because everybody was doing it. But like honestly, like it's not something I really pay attention to. I've never really done a whole lot of research on it. At the end of the day, it's not something that I would say that I plan to put a lot of money into because I don't understand it. I also haven't made the effort to understand it to make it less risky, right? But commercial real estate for me is, I would say, is the least risky investment vehicle that I have because I understand it so well. I understand the market cycles, I understand the impacts, I understand the macroeconomics around it and where commercial real estate is generally going to be heading over the next 5 to 10 years. Spend all their time understanding and investing in the magnificent seven real stocks, right? Which is like, what's it? Apple, Amazon, Google, Nvidia. I think AMD is included in that, but some people make it, that's all they do. Or Tesla's in there as well. That's all they do. That's all they study are those magnificent seven stocks, and they understand what's coming. They understand the financials of the business. They understand, trade agreements and how tariffs are going to impact it. Like, I don't know anything about any of that stuff. And frankly, I don't really care a whole lot. Yes, I do have some money in stocks and I just throw it in there and say, okay, well, 30 years, I'm sure it's going to do well. But real estate is the one that I eat, sleep, and breathe. When I'm done working for the day, I sit down and I watch some YouTube videos, and I'm watching YouTube videos from like Graham Stephan talking about what's happening in the, how it's going to affect the real estate cycle, how it's going to affect real estate values, and what the Fed is doing. And I find it fascinating, and that's why I believe that I'm a good real estate investor, and I plan to continue to do it for the long run because it's something I value, it's something I enjoy, and it's something I'm good at, right? So that's why I think that the myth of it's too risky to invest in real estate is not true, right? It's ultimately your perspective on how it's handled and your level of involvement, essentially due diligence on the investment vehicle. And the more understanding that you have of each one of your investment options to you, the better investor you will be in the long run. So, all right, that's all I got for you today. Those are my 3 myths of ultimately limiting beliefs of why people don't get started in real estate investing, and how I've used my own life examples to get around each one of those limiting beliefs. I'd love to hear your thoughts if you have any questions about some limiting beliefs that you might be having. Shoot me a message on Facebook or Instagram or LinkedIn or something like that. I'm happy to respond and try to help you out and provide you some real life examples of how to get over those limiting beliefs. So appreciate you guys joining, and we will see you again next week. Peace.